Jal Irani is up next from Macquarie to talk about the very important CCEA meeting which happens later this evening. Jal, good morning. Everybody is waiting with great anticipation. You've written about it, but if we do get to something like $6.6 in terms of pricing, going up to say 8 over the next couple of years, do you think that will be pricing incentive enough for companies like Reliance to become ultra aggressive on getting more gas production or ramping up gas production?
Well, essentially to start with, India has got very significant potential gas resources, and at every threshold of price, a certain amount of these resources can be extracted. So essentially, if you're talking about a price of $6.8, which is about a 60% increase, we will have, I'd say, about 20 to 25 TCF more, which is about 50% of additional gas reserves in India becoming viable, and that would be a good start. But there is significantly more to be found, more to be extracted at even higher prices. Roughly for every dollar increase in price, about 9 TCF becomes viable. And even at $6.8 an MMBTU, which is healthy, but it's a very far cry from international prices of $15 to $20 an MMBTU. So it would be a good start, but it still wouldn't really allow any of the players, leave alone Reliance, to become very aggressive in the space. Notably, this $6.77 an MMBTU, which is being talked about, is based on a formula, and this is just the initial price which is being, the formula suggests that this is just the initial price. The price of the gas, the formula suggests that the price of the gas escalates very quickly to about $8, and by really early next year. And in fact, if the Rangarajan Committee formula has to be implemented in full, it could well go in excess of $12 by financial 2016, which then truly unleashes India's full potential for significant gas reserves.
Jal, hi, good morning. So two-part question here. Do you think if that indeed is the formula that's worked out, it's going to take some time for some of these stocks to react or pick up significantly because of the gas price hike? And secondly, how meaningful do you think it's going to be for the two PSU names involved, ONGC and Oil India?
So I think there are two elements to this. The first is that the most significant and obvious beneficiaries from an earnings perspective are going to be Oil India and ONGC. For every dollar increase in gas prices, Oil India's profits go up by 14% according to estimates, and ONGC by 10%. Of course, it is to be seen whether the government imposes some sort of a cess or enhanced subsidy burden on these companies. But these by far would be the most significant beneficiaries. Sorry, what was the other part of your question, the first part of your question?
Whether this will take a long time to play out, Jal, and the potential will not be unlocked anytime in the next few quarters.
Sure. For production to increase within the next 2 quarters is virtually impossible. The first material increase in production we would see is perhaps in a year's time, and in fact 2 years' time. So even the existing wells of Reliance's KG-D6, D1, D3 area, the workover program, so to clear out the sand and the water ingress itself would take about 2 years, about 1 or 2 years. So the first relevant increase in production, the easy stuff, would take at least a year. But the nature of the upstream business, especially gas, because you require a lot of infrastructure and linkage, is one of long term. So it's really after 2 years that you'll see things starting to rocket, and the newer fields will perhaps take as much as 5 years, but the benefits will start flowing through within the next 2 years, I'd say.
The concern is with ONGC, Jal, because what the government may give with one hand, it may take away with another by levying an extra subsidy burden. I mean, that's been the problem with that. Do you think that's the way it might pan out, that on paper ONGC benefits, but when the actual numbers come in, their realizations are pretty much stuck at the same level?
That is a possibility, and in fact a probability as well. If I may again answer this in two parts. Firstly, if you look at history, so about 3 years back when ONGC did get basically a doubling in gas prices, its realizations were less than $2, which were hiked to $4.2. I mean, the government did increase effectively the subsidy burden, but over a period of 2 years, ONGC was allowed a profit increase of 35% odd, which is pretty healthy. So the bottom line here is that the government recognizes that there is a need to give higher cash flows, higher prices, otherwise you're not going to get a higher production. The important point also here is that ONGC's cost of production for gas is $3.8 in MMBTU. Despite Mumbai High accounting for about 60% of its production, and Mumbai High being one of the most prolific and the lowest cost producing fields in the world, even there the cost is nearly at the selling price. So unless you give a reasonable price, you cannot produce. The third thing is that unlike the new exploratory the NEL blocks, which are pretty much the newer blocks such as the one for Reliance Industries, for ONGC and Oil India, almost all the production comes from the nomination blocks, where there is really, other than royalty ranging between 10 to 20%, there is really no other taxes. There's no profit share. Even on oil, there is a fixed cess of about $12 a barrel for the nomination blocks for Oil India and ONGC, which is absent in gas altogether. So the point being that also it is fair that a modest amount of the upside does accrue to the government in the form of incremental taxes, as long as ONGC and Oil India still get a reasonable net increase in any case, which in the past the government has demonstrated that it's willing to do.
Let's see what happens. Thank you very much, Jal, for joining in with those views. That's how things might pan out for individual companies post an expected gas price hike.